Hello, 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 everyone. Mike Arnold here, co-founder, Patrick and Partners, along with Bob Iacino. How is everyone doing this fine Sunday afternoon? I know the dedicated people here for market prep. If you're watching this because you were busy with family or other weekend activities, well, fantastic. Thank you for watching it on the replay. Again, no need for you to be here live. I appreciate you watching it. Period. So, I just finished, by the way, recording the weekly sector overview. Going to be editing that. Ran into a couple little snags with editing. Going to be editing that and then posting it shortly after this airs. So, make sure you watch that at some point before the market opens tomorrow. All right. Hello, Waka Waka. Good afternoon, Davey. Good afternoon, Patrick. Waka Waka. Another day, another week. Is that 2 weeks left for you? Then you're off for 3 weeks. Well, that would okay. Well, are you going to be watching any of the live streams, Waka Waka, or should I not expect you for 3 solid weeks? I don't know who will bear the bearish flag banner if you are not here. Had enough of stupid in the markets. Oh boy, had enough of stupid. Hey, Mickey78, thank you for being here. So let me know with that Waka Waka. Oh, hey, good. Anissa, thank you again. The people tuning in from you know what? It's late over there. It's late and you're still tuning in, and I so much appreciate that. You spending the final couple hours of the day or the night with me. Thank you. By the way, if you are new here and you're like some of these dedicated viewers and subscribers, please also consider subscribing yourself and hitting the like button and ringing that bell. All right, not going to waste anybody else's time. Again, check out that sector overview once I get it posted. You are welcome. You are welcome. All right, let's see where we sit. By the way, we're kicking this off. Neil, as I call him, Cash and Carry, but Neil Kashikari had his interview, and he said the market's getting over its head of itself with this Fed pivot stuff. So we're going to see if other Fed speakers this week reiterate that and try to clarify Powell's remarks. Okay, which was interpreted as market dependent means if there's any softness, we will pivot. So we shall see. Let's see what. Well, I asked Waka Waka a question. Well, we'll try, but Turkey odd time 4+ hours. So Waka, just adjust your sleep schedule. I'm not changing the live stream times for you. Got me puts and just gonna let them ride till end year. That's probably a more decent strategy than at least let them ride into November. At least. All right. Well, we'll miss you if you can't tune in, Waka Waka. We will definitely miss you. Again, we have a little longer with Waka. You just have to let us know when you'll stop showing up so I won't ask for you every day. But other people like George will still be here, and I know Anissa, unless she goes on vacation, will be here. And we have Patrick here. Oh boy, I'll have to make do. All right, let's take a look at what's coming out this week. S&P Global Manufacturing PMI. We're going to see if it keeps contracting more, or where that sits for July. And that's 15 minutes after. And then high is the ISM Manufacturing PMI. Again, seeing if that stays above 50, but seeing how much it contracts. If it goes below 50, that could be very interesting, because then all right, manufacturing is contracting. Does that reiterate the Fed's going to pause or pivot play? Or I don't know how to interpret any of these. We'll just see how the market reacts. Just be aware, 8:45 and 9 a.m. Central Time, so 15 and 30 minutes after the market opens, there is stuff coming out tomorrow. What I'm really interested in is the ISM manufacturing prices, where that comes in with previous, and if employment still stays in contraction. Remember, anything still in expansion somewhat favors the Fed still continuing with more aggressive and less aggressive hikes in my book. On Tuesday, we have Evans speaking 30 minutes after the market opens, and remember, he's historically dovish, but let's see what he says and what he reiterates and stresses if the market's overreacting to the pause or pivot narrative. Wednesday, we have ISM non-manufacturing PMI So that's going to be another one, 9 a.m. Central, 30 minutes after it opens. And we have the S&P Global Composite PMIs and Services PMIs 15 minutes before that, which are forecast to be in contraction. ISM still forecast in expansion. So that will be interesting. Also going to keep an eye on the ISM non-manufacturing employment, which was in contraction, and the prices to see how that comes in. So there's plenty of stuff on Wednesday. Then we also have, as always, Crude Wednesday, crude oil. So if you're playing crude or anything in the oil sector, do not ignore 9:30 Central Wednesday. On the 4th, on Thursday, we have Challenger job cuts, very minor. And we have Mester speaking at 11 and continuing jobless claims. Remember, once that starts getting over 1,400, I forget what my exact number is. It's closer to 14, 15. That starts triggering a recessionary move, other than the what everybody's been touting, the 2 negative quarters. So Thursday's a little lighter, but it will be interesting with jobless claims. Non-farm payrolls on Friday. So it's Friday non-farm payrolls. So even if that softens a bit, does it change the Fed narrative? We'll have to see, but that's a big number on Friday, 1 hour before the market opens. So that's where we sit. Not as heavy as last week in terms of everything, but still a fairly busy week with a couple key numbers. No, Waka Waka. Tom Tom will not take your place. As the antithesis of Waka Waka, Tom Tom, markets always go up. Waka Waka. Markets are going to zero. Well, you're not that bad, Waka. I'm actually more aligned with you than I am with Tom Tom. I'd rather hedge risk at this point. Now, you can see pretty much, especially retail, which just went in the rip your face off. I covered a couple little of this on the weekly sector, so make sure you turn into that. But you had some mega cap rallies. You pretty much had a very strong week, up what was it, 9% for the month. FOMC still favoring that 25 basis point, but it's going to start seeing if with what they're speaking and any information that comes out if that 50 basis point starts creeping up for September. Remember, that's not until September 21st. Before that, we have the Jackson Hole at the end of August, which is pretty important to see what Powell has to say. And we're pretty much in neutral gamma territory for the gamma exposure. So on sell-offs, we could get amplification to the downside. Rallies get muting to the upside. Earnings, not as busy as last week. Not a lot coming out tomorrow morning. That's super interesting. I mean, there's some other minor stuff tomorrow afternoon, like Pinterest. Pay attention to Activision Blizzard, Mosaic, Transocean from a energy standpoint. Tuesday will be interesting to see Uber, Caterpillar. Let's see if British Petroleum's strong because Exxon and Chevron knocked it out of the park. Marathon also checking on that one. After the close, though, pay attention to AMD, which has a substantial run-up. Also going to check out PayPal to see if we start getting some rollover moves in that. SoFi, Airbnb will be interesting, though, to see if that rolls over. Starbucks, from a consumer and inflation standpoint, will be very interesting from that perspective. Wednesday, you got Marathon Oil after the close. We have Lucid to see with that EV space. Robinhood, ugh. Oh, well. Not much Wednesday. Alibaba is at dead before the open on Thursday. Kellogg's, again, consumer and inflation perspective. ConocoPhillips, do not ignore that. We still have energy stuff coming up. After the close on Thursday, AMC, for all the AMC apes out there. Not expecting good numbers from that. Friday, nothing. I'll check in on Western Digital just from that perspective. I'll peek at DraftKings, but nothing else from that earnings. So not as big as last week, but not something that will generally massively move the market, but we could have a cumulative effect from some earnings and guidance. All right. In the sector overview, I'll just give you a preview. Lots of things, cycles are at the top. Lots of topping cycles. Excuse me, literally recorded the sector overview, which ended 5 minutes before this live stream. So I've been talking for a very long time. And I'm still dealing with some tech stuff. Trying to get a new streaming computer, which is, of course, back ordered with parts for like 3 weeks. So that's not helping stuff. So still cobbling along. Let's start with the bigger picture. Again, this red line was the 37.5 from this down move. The next major area on a continued rally, we're going into major overhead resistance. We have the 50-week exponential moving average. We have the end of the clear path. We finished that 87.5% move when you got the close above the 62.5. And we're going into a major breakdown zone. So between the lows and the key candle bodies right here and that 100% move, you have a lot of overhead resistance. Cycles are at the top. Not yet overbought on the weekly, but it takes a lot to get it there. I'm starting to watch for a reversal play coming up sooner rather than later, especially since we fulfilled that 87.5%. Daily cycles aren't at the top, so could we eke out a little more? Yeah, excuse me, but this is aggressively moving up stops in plays. Okay, because I really have to see with weekly cycles pinned at the top. I'm not buying the Fed pivot or the Fed pause yet. We're going to get some more key data coming out. If we start breaking below Friday's lows, at this point, if we break below tomorrow with Friday's lows, we'll have more of a topping pattern in place. There is no great look at there. Again, it was a breakout zone with Friday. So overnight, if we start pulling back, my minor support is 4120 area. Major support is 4105 to 4100. Why? That's the breakout zone from Friday and your rising 1 hour rotation zone. On the 4 hour, we'll reassess this tomorrow, but that would also take it to see the 4 hours right at this 4100 also. I don't know if I said 4,000 or 4100. If I said 4,000, I meant 4100 to 4105. That's my key pullback zone for overnight. We start getting below about 4,094, 93 tomorrow. We'll start gauging for the bigger pullback. We're into a clear path move. Pinned at the top on overbought with 4 hours. Cycles at the top on 4 hours. Cycles at the top or getting to the top on daily. Cycles at the top on weekly. If we don't get that move tomorrow, we have some stopping points. I don't have great pausing bars just yet. Going to have to reassess with some pausing bars overnight. But just from this point of view, in case you can't tune in tomorrow morning, 41.58 and then about 41.92, 41.58, 41.77, and 41.92 are my key levels for tomorrow on any bull move. But again, being cautious to the upside, prudent to the downside. NASDAQ, same story. Actually, that completed its full, I'll call it the 62.5% pattern. Again, cycles getting to the top, getting to overbought, getting a potential divergence set up. Also on the weekly, getting into the breakdown zone and not yet at the 37.5. So to the upside, my next minor target is about 13,100 and then 13,220 area on a continued rally tomorrow. On the pullback levels, pretty much going to raise this up a bit. The pullback level is about 12,927. And then more substantial would be on that 4 hour. This is what I'm watching overnight. Would be about 12,862. Below that, we got a clear path move. So that's where we sit with that. We'll have to fine tune overnight, but that's my next major level higher. This prior harmonic, we still have 13,100. Let's see. Let's just see what we have comment-wise. All right, thank you. I just don't have the piece of paper in front of me. I'll have to look at continuing jobless. I think you cited 1456 is critical. Thank you, Patrick. Again, Patrick with the save on that. I knew it was in the 1400s. I have the paper written around here somewhere, but I have my desk a mess because I'm dealing with tech equipment everywhere. So I have to dig out that paper, but I will dig it out before that number comes out. But thank you again, Patrick with the good notes. July was a bust for the shorts, but September is coming. Winter is coming too. A lot more ARK holdings report this week. Can't wait. We'll see what ARK does. Hey, Daniel. Hey, Christoph, thank you for tuning in. Hey, NASCAR, thank you. Pumping the pennies. We'll just call it NASCAR pumping the pennies. Dow hit the harmonic, pausing this 32,832. My pullback level on the Dow is 32,600, and then majors 32,341. To the upside, we should still technically eke out the 87.5, which is 33,018. So that's still got a little more upside potential, but if the Nasdaq and the S&P sell off, then that would just miss it. And the 50 overhead there. So we get above there. The next major level is 33,163, and then 33,279 or 280. Cycles at the top on the daily. Cycles at the top on the weekly. Cycles getting to the top on the daily. Major pullback level on the daily is 32,180. So that's what I'm watching for. Again, things are forming topping patterns, but we don't have concrete tops in place. Russell, we hit the 87.5. Next level is 1896.80, and then I'll pay attention to 1913 to 1918. Major pullback level is 1847. We'll take a look at just the overnight stuff tomorrow. The DAX, again, first, second targets on that doubles hit. Could possibly eke out another final target, 13,592. And they're getting into major resistance zone there. And also on the retracement from this whole down move. The retracement on this whole down move, we're entering that. We got that 50% harmonic. And we're entering this key rollover area. So not ignore that and getting overbought. And daily cycles getting a top on the DAX, and weekly cycles getting a top. So is there potentially a little more upside? Yes. But anywhere in here, we do have a key gap filled to about 13,760. So if you push above this double target, that is my next target. But then I'm setting up for a rollover play in the DAX once I get a stronger topping pattern. Key support now coming in essentially at Friday's lows and the breakdown area with this key gap open about 13,340. Notes, remember we triggered the inverse head and shoulders. In overbought on the daily, overbought on the weekly, watching for a pullback in the notes. That will be very telling. I mean, this could easily even pull back without stopping out this pattern. This could, the stop's all the way back at 116.19 on a closing basis. So this could easily pull back even to the daily rotation zone, even to this prior peak without invalidating the pattern at all. So my two key levels on pullbacks, because this is overdone, 120.04, then about 119.05. But this is a longer term, and this could take weeks to unfold. Keep that in mind. I mean, this could technically not finish unfolding until the September meetings. So again, for those newer, I will use the harmonics just as shorter term key levels for any shorter term trade, 120.126, 122.21. But the major for those inverse head and shoulders, 123.19, 125.07.5, 126.28. And remember, that was also triggered on a weekly basis. You can see the pattern here on the weekly basis. Also, the first weekly close above the weekly rotation zone since the close back in last July. So this is a pretty major shift. Does that mean it just continues to rally instantly? No. But this is a major substantial shift in the 10-year pattern. Waiting for cycles to turn over. I think that's a smart move. Pumping. I'm not. Well, you could still pump. I'm just glad you can put in further comments. You're just putting in here stocks that have already rallied NASCAR. Put in some other constructive things too. All right. Thank you for being here. I'm going to be shorter with some people who don't put in constructive things and just put in stuff. I could show patterns all day long on stuff that has already gone to targets, gone to stuff. It doesn't help people. Crude. Still, we got a attempted breakout on Friday, but still in consolidation. I don't have a great play in crude just yet. You still got some selling pressure above this 100 to about 170 mark. I don't have a great play yet. Again, I will start watching around that 170 mark for a breakout area. Again, quick little reversal. As I said in the sector overview, keeping an eye on this 200 flat about 94.25, 94.20. We get a close around that. I'm starting to watch for a potential bigger pullback, but again, I'll watch for that weekly trigger of the potential double top. So sitting on the hands of crude, no great play at this point. Cycles at getting to the top on the daily, at the bottom of the weekly. So we'll get more clarification at the beginning of the week for crude. Remember, you don't always have to have a setup. Sometimes it's waiting is the best metric. Natty gas. Watch. We technically on a close above Friday's high is a rotation and a %B buy entry. It is aggressive after this pretty big run up. If we do break below Friday's low, my next key area I'm watching is about 755 to 762. Daily cycles getting to the bottom, but not yet rotating up. Weekly cycles at the top, so still a mismatch on cycles. So being very patient with natty gas. Gold, strong rally to the weekly rotation zone. Weekly cycles turning up. Daily cycles overbought at the top. I'm watching for the pullback play and now a longer-term bottoming play to go in. My key levels that I'm really watching on a pullback is about 170 to about 1770 to 1759. And then we're going to assess the longer term, and that's not in gold. We'll watch for plays in silver and potentially in copper, but my first two would be gold and silver, and my first one would be gold. Silver's running up. The key support I'm watching is even a pullback to 1950. Dollar index holding at that weekly rotation zone, at weekly cycle tops and rolling over, not at the bottom yet. Dailies getting to that bottom, watching for a little bounce play. My bounce play, though, is only to 106.31, 106.30, and then going to reassess. There's no great play in the dollar index at the moment. Would love to see a little bigger pullback in here, but in order for me to get a strong rotation back up, I need to have a buy signal triggered. It would be an aggressive buy signal above Friday's high. That's all I have. VIX we'll take a look at tomorrow morning, but with this close below the 200, still watching for a potential a little more pullback and then a bottoming pattern in the VIX. Weekly cycles are at the low. Daily cycles are still heading down, so we're going to be watching for a more substantial bottoming pattern in the VIX, which will correspond with the topping pattern in the S&P and other key indices. What else do we want to look at real quick? Euro. Let's just peek at the euro. Euro, it's, if the euro can get a close above about 102.80, then it will be a nice breakout play at about 103.80. 102.80 is a play to 103.80. And then that will watch for the bigger dollar decline. And then we might have another dollar setup. But it's nothing until we get that trigger, and I'd prefer a daily close to trigger it. Key support coming back at 111.50 area. So it's either a breakdown or breakout play. In here, it's in no man's land, just chopping back and forth, so nothing to do there. Bitcoin tried to poke above the upper channel multiple times. Tether has gone on a massive printing spree. Again, Tether's an unbacked pile of absolute crap. And they're gone on a massive printing spree, which has upped it, but it has not been able to sustain above this channel yet. So that is actually pretty bearish price action. Even if it can break out, my target has not changed. But watching longer term for another rollover play in Bitcoin. All right, that was a respond to this. Okay, you guys can respond to that. Again, put in some useful stuff, NASCAR. I really appreciate you being here, part of this channel. But put it. This is on. We're not even talking about a lot of individual stocks at this point. We're doing a market overview. At least give your market thoughts. Okay. You know what? Again, once we're at the bottom, we'll stop, or more of a substantial bottom. We'll stop having these kind of plays showing up. At least we don't have the naked spam bots showing up, at least. Maybe they took Sunday off. Tesla, we've had the major gamma play in that back into the major topping area. Next key resistance for all those Tesla players. I'm watching after this major gamma pump for another top coming in on Tesla, but on a rally 910. And then the major zones, let me clear off a couple of these. My major area would be about 944 to 953. Pullback area, 839, and then 823, and then major pullback 776. But I'm start watching, especially it looks like we could getting a divergence play on the daily. Weekly cycles getting overbought, and weekly cycles at the top, RSI getting closer to overbought, and within the reversal area on the weekly pattern. So unless we start still seeing the big gamma juice preparing for more of a Tesla pullback play. All right. Let's see. Is there anything else I wanted to touch on? Look, AMD, we have earnings on Tuesday, remember, after the close. We filled the gap. We finished the plays essentially to that way. You got to reverse the harmonics now. Just be careful. This has gone on a pretty substantial run, and long-term semis are still in a sell pattern, and we're up against that 62.5. So gonna be keying off a pullback to about 90.50 and major support about 80. Your major support level is 84. You break back below there, I'm in sell mode on AMD. But to this, there's no great pattern with Cyga's getting to the top, so it's going into earnings. It's just an earnings play. If you do get a close above 62.5, statistically, it could make a run to about 104.60. But you're also against that weekly rotation zone. There's just nothing great with cycles at the top. So I'd be in cautious mode more so of these. If you're not in them already, and if you are in them, it'd just be a trailing stop. We still have all the juice from the semiconductor bill. But we have divergences setting up. My guide to this is if you're not already long, don't chase it. Well, Tesla tends to follow the news, and also you get, amazingly enough, all these major gamma pumps, right? Either before Elon sells or bad news. There's major gamma pumps. It's fascinating how that happens. So, that's all I'm saying. But again, the stock can rip your face off, and there's no great topping pattern just yet. It's at a key area. What are we talking about? In 1 month. All right, I'm not even going to end phase. Let's take a look at end phase. AB, thank you for being here. And AB, end phase. Potential double that never triggered from a while ago. Again, I don't do much with end phase. End phase. Let's just see where we sit on again with energy and cycles at the top. I'd be more cautious than not on this and start trailing and waiting for some kind of pullback. But your major breakdown zone is about 255.88. End phase did break out rather nicely and just went on a tear, and then you have that gap fill to 254. This would just be trailing for me at this point with major overbought on the daily, cycles getting to the top, and still not the major breakdown on the weekly. But this is the market we're still in. Your cycles for the, I mean, this is a great area for those also trying to learn. This is a great area to use if you're still majorly bullish on end phase. It's a great area to use reverse harmonics. Why do reverse harmonics work so well with this? Because that gives you your potential targets. Even if this is now going to continue to rally, even after a pullback, 303.59, 324.72, and you're not trying to nail it to the penny. That gives you an area to raise stops and or take profits because you are at new highs. Just be careful with it overbought on the weekly, overbought on the daily, and cycles at the top, chasing it at this point. Mike, do you think Amazon will fill the gap on the daily chart? Thank you for being here, Connor. Do I think this gap will be filled? Oh, yeah. On the next market rollover, yes. Now, are you talking this gap to still the upside? I mean, you've nearly filled on any push higher. You still have to fill this gap from the 27th of April. So on any push higher, the target would be 138.17. And then if it did continue higher, the target would be 144.60, which is the gap from the 28th and closer to this declining 200. Anywhere up in here, I'm watching for the rollover play. Break below Friday's low, yes. I am watching for the gap fill, but my first target would be 125.65 area. Why there? That's the breakout zone and a level of significance. And then it would be the gap fill play. And yes, longer term, on our next significant rollover play, I am watching for the Amazon gap fill to the downside, which is a decent play to the downside. Could it eke out a little more to the upside? Dailies on the cycle highs, but not yet rolling. I mean, weeklies on cycle highs with not yet rolling over. Dailies could run a little more. And this is way overdone. I did not think Amazon's earnings were that good. And this kind of move, and remember, this is post-split price. This kind of move, which is up, I mean, this week was up over 10%. That was pre-split a 30% move off of earnings. No. And fundamentally, which will get some rollovers because the thing growing with Amazon is their web services, which still, but you're getting a lot of competition in web services. Web services was okay. And look at the PDE on Amazon, 109 again. And we're not in growth stock mode. Also returning to your key breakdown area. So longer term or even midterm, I'm watching for a rollover play. I'm actually watching for, after that, new lows to be put in before this market's done. But I need it to start breaking below Friday's low. Or I need a topping pattern. And you even look here. This is just on your 1 hour. This is yeah, you have two tops here, but this would be the double top, and I hate this. It's more of a horizontal channel. I'd just rather play the breakdown play from those lows. And here's a great area also for the gap harmonics. Remember, you go from the close of the gap. This is actually what tested out the best. People will want to know why it's different. I don't know why it's different. It's what tested out the best. But your key support area, if you're doing shorter term plays for Amazon without it making a new high, would be 120, 130 roughly, and then 128. A close back below 128, target the gap fill. Now, if it makes new highs, you got to ratchet up your harmonics. Let's see. Okay, yeah, I did go on the down. I just tried to go with that. Royal Palms, thank you. Does OXY have any more room to the upside? I mean, does it have any more room to the upside? Again, just to recap. go. Come on, don't freeze on me. There we go. Remember, earnings are on the 2nd. So on Tuesday, you're sitting in this very key area. I mean, earnings, they'll probably beat earnings. Unless they really screwed something up, they'll probably beat. And if you get a close tomorrow above 66, 64, you technically favor a return to 71.61. So, but it's your earnings gamble. If I had to bet based off of the way other companies so far, the big boys like Exxon and Chevron have handedly beat, I'd be prepared for an upside surprise unless they really screwed up something. Again, you're flat. You had that horribly sloppy flat head and shoulders, which is pretty much off the table. But your minor resistance is 6 to 73. Yeah, I do think it has a more upside. And the levels, if I was structuring an option play, I'd be considering utilizing about something right around the 65s as a lower strike, and something around 70 to 72.50 as an upper strike. Can't give you a specific trade there because that's not what we do here, but those are the areas I would be watching. I do actually think, based off this play, it has cycles are at the bottom on the daily and turning up. Weekly, cycles aren't yet at the top. So if you made me guess, I'd be shooting for some more upside in this. But I would manage a stop closely and would not want to stop back below about 61.70. 61.70. If you wanted to give it a little more room, 61 with the flat 50. But I wouldn't give it any more room to the downside, because if it closed below that, I'd be watching for a retest of this low range. But I think, from my personal perspective, there could be an options play to the upside still in there. Again, it's risky going into earnings, but I think you're not overbought yet also on the daily. When are we using reverse harmonic? The reverse harmonic is the fib extension, but it's not using fibs. Pavneet. So see here. So this is the fib extension. I have a modified though. So for example, let's say you were playing Oxy for a breakout. This is a great area to use reverse harmonics. So let's just pretend this was going to new highs, and I'm not saying it is. But if this was going to new highs, I'm just using this as an example. This would be a great area for a reverse harmonic. And why is it harmonic versus fib? Because if you look at the settings, they're using harmonics, 8th harmonics versus fib levels. So it's using the fib extension because that's what the tool's labeled, but it's using harmonic levels instead of fib levels. Okay? Am I good rolling covered calls? Since end phase is back under my strike price of 282.50. I mean, that's again an open-ended question, because if you don't want to get called away, yeah, you can roll your calls. I'd be watching for a short-term pullback play, so you got to take that into consideration. I don't know when your expiration date on your calls are. You gave your strike price of 282.50. But, I mean, I'd have to know your expiration. I'd have to know, again, where you'd sit. I'd be watching for a pullback play, period. Okay, because you're just in the money barely on those calls. So if your expiration is in August, you could easily get that pullback before expiration. And if you sold, I'd then look to roll after a pullback. But again, I can't give you specific trading advice. I don't know your account. I don't know your duration. I don't know your entry price. I don't know your overall portfolio strategy. But personally, I'd be watching for a pullback. Now I'm a dog, not a goat. Connor? I'm confused. I'm just kidding, guys. Uh, you're welcome, Royal Palms. Again, I'm glad you are looking at those areas. That's the point of this channel, everyone. The point of this channel is to help you. You are welcome, AB. And again, I'm not trying to be obtuse or, again, if I was it would be irresponsible of me to try to manage everybody's portfolio because A, I'm not a financial advisor. B, I'd then be doing that full time and have to be charging people as a financial advisor, which I'm not. I'm trying to get people learning how to do their own management and look at stuff that I spot. Now, those are great questions. How do I deal with this with options? But I sort of have to answer more generically and give you things to think about. And because from a fiduciary's point of view, it would be very irresponsible. This ties into something else. I keep getting asked, well, can you do a signal service, especially short-term trades? And at some point, we'll do a signal service again for long term once we get to more substantial bear market bottom and more substantial valuations. Why? Because it's so tactical trading for right now that it's harder to do a signal service without constant updates during the day. And I'm going to tell you something. Bob's trading and my trading come first. Sorry. That's what comes first. And people want to know why I don't do like an intraday signal service. Because I'm going to trade my stuff first, my setups first, my stuff, and you'll always be behind what I'm doing. And I think this is a good point to address this. So I'd be executing all my trades first and scrambling to send out signals to, all right, I already got out, now you have to get out, or I already got in, now you have to get in. And in these markets, especially with rip your face off rallies, you're going to get worse entries, worse exits generally. And I don't think that is appropriate. Because then I might as well just start up a fund and manage your money. Which at some point we might do. That's why we don't do a short-term signal service. Because I don't want people to be trailing what I'm doing. And I'm trying to teach you how to fish, not rely on me for fishing. And I get hit up so often, so many times a week. And I'm trying to explain this to people. It's not that I don't want to help everybody. I'd rather help you by learning and to learn. Like ask questions like AB did, which I can sort of point him in things I look at based off his position so he can learn how to analyze the market and analyze his positions. But that's why we don't offer something like that, because I feel, and yes, could I make a lot more money doing this? I mean, taking fees and managing stuff? Yeah, but that's not, I love to make more money. But I want to do it with helping people. That's why we also ask for donations. We don't just sit and charge for a bunch of stuff. I just wanted to clarify that. And at some point, we will put out a longer term service again to help people with setups, and more so where, if I can say, okay, when it closes above this at any given day, rather than saying, you know what, because things can reverse on a dime now, and I don't want to have to send out multiple intraday updates because then I'm always doing stuff, literally, and I'm worried about everybody who's in a position, because I take everybody's stuff, if they're trying to follow along with me, very seriously. I take it very seriously. I don't just put out stuff to try to make money. That is a load of crap, and the people who do that, you know what? There's better ways to make money than that. Learn to trade. Learn to invest. But that, I wanted to address that because I've been asked that so many times. So that's where we sit. In case anybody's interested, Once we get into a position where I think we're in a more stable long-term environment where we only have to send out daily signals and or weekly signals, then I will do something on a longer term basis again. Until that happens, that's why I'd rather just keep teaching people and showing potential setups and helping you all learn, because then you're never dependent on me long term. You've learned how to do stuff, and you've learned, just like where was it? AB is learning. Royal, thanks. I was looking at those exact areas. That's fantastic. Whether you're using my stuff or came up with that on your own, that's the key areas to look at. So I hope that makes sense. Okay? It's not that I don't want to help people. It's I want to help people responsibly. You know, and that's a true statement, Waka Waka. I don't go on speculation, IPO, or great if you're a gambler. And I say, fine, you want to play those kind of things? I have no problem with that. That should be a very small position of your portfolio. And again, if you notice, I manage risk first. Why do I manage risk first? Because rewards take care of themselves. And I'm still seeing way too many chase the reward. And this is also something I wanted to bring up in case people are still going to listen to me ramble on. With long-term stuff, and here's what I was thinking about this morning while I was doing my workout, because I think about a lot of stuff while I'm working out. I'm still seeing a lot of people wanting to, we're going to new highs, we're going to this, we're going to this. Look, we get a key close, a major close back above 43.72. Statistically, it favors a return to the high area. I get a medium-term buy signal, I'll let everybody know. Okay? I get a long-term buy signal, I'll let everybody know. Until that happens, this is a bear market rally. Even a medium-term buy signal could be a bear market rally. Why? And I was talking to somebody the other day saying, I don't want to wait till it gets back above 43.68 on a weekly closing basis. I wanted to have bought down here for new highs. And this is the kind of thing this is still the market to manage risk first. You manage risk. Reward will take care of itself. Let's hypothetically say the Fed were to pivot, okay? Let's hypothetically to say they come out and say, hey, we're pausing and we might even start cutting. Screw inflation. Screw it. We're going to pump the markets. They wouldn't say that, but I'm saying that. All right, I'm just putting up the reverse harmonics for a reason. I'm going to show you something. Everybody wants to have bought down here. Now, were there trades? I haven't said we were in short-term bullish mode. But let's point something out. Let's say you got long-term buy signal here. And let's say it went to new highs. Let's even say it went to the 25% harmonic, which would be after new highs. This would be a stop raise. This would be the first harmonic off the reverse harmonics. I'm just using this as an example. What is your upside from here? Your upside, let me unanchor this. Hold on. Your upside, which then you would favor statistically, you would favor a potential 8% to 10% rally from there, and then on new highs, a 13 to 16% rally. Statistically, you'd have the odds in your favor. Versus, you don't have the odds in your favor down here. And what I'm seeing is people are like, well, I wanted to buy here. That's just greed. That's greed. That's not managing risk first. That's trying to still chase returns first. Because you don't statistically have the odds in your favor. People are still trying to chase returns. There's a time to statistically favor a more bullish returns. But what's wrong with still a potential 16% upside from an entry with a 70% probability versus right now a lower than 50% probability that you'll even get to that level. We're still in the chase returns rather than move. Now, if the Fed were to say, hey, we're pivoting, we're going to rate cuts, no more quantitative tightening, we're going back to QE. Fundamentally, would I shift? Hell yeah. Technically, we'd probably, just separate from that, the market would just naturally trigger a lot of patterns, and we'd be long-term bulls, we'd be medium-term bulls, the portfolio would be repositioned, and we'd be looking to actually enter stuff and outperform the market by targeting key sectors and key stocks within those key sectors to try to get even more alpha than the broad market. So I was just citing the broad market returns. That word would be a potential. A potential. And we look to generate more alpha than that. So we'd be looking with statistical favorability to outperform the market. So why not position ourselves appropriately at that point rather than trying to chase returns when the probabilities aren't there yet? But everybody's still afraid to miss out a move instead of trying to capture a shorter term move, trail your stops, and if the market keeps going and triggers a longer term move, fine, you can always reposition a portfolio again. But I'd rather let the upside take care of itself and manage to the downside instead of getting wiped out to the downside or suffering massive potential losses to the downside that take out a chunk of a portfolio. Well, the probabilities have not shifted to favorable upside yet. I hope that makes sense to everybody. That's also why I won't put out another longer term product until the portfolio favors the upside, where it doesn't have to be constantly managed, potentially hour to hour or day to day. Because again, my portfolio is going to come first. I'm sorry, unless I'm managing your money specifically and I have a fund, then that fund actually comes first. Because then my portfolio would be part of the fund. Let me know if that makes sense to everybody. I still see too many people. Why are they trying to call the long-term bottom when I don't have a signal? And people are just, they're chasing the hypothetical. Oops, the Fed's going to pivot. What did I do there? The Fed's going to pivot. I don't want that. I want my stocks. Where'd my stocks go? There we go. I don't want you. Get off the screen. There we go. I hit the wrong button. Sorry about that. Okay. I'd like some feedback, actually. And if you're not watching this live, give me feedback in the comments on that. Sorry, I went on a little rambling thing. But that's, if you want to know who I am, and I don't, people don't want to come to the channel. People want to unsubscribe. People don't want to subscribe. They're watching this for the first time. They're going, oh, he doesn't do this, and that's fine. It'll take us longer to get to 5K subscribers. Whatever. You're welcome, Pavneet. Guys, please make a habit to like every stream when you open and comment once recording is posted. Let's go 5K. Thank you, Pavneet. Rolling is a good idea. It's just tactical at that point. Yes, especially in a bull market, rolling is a good idea. In a still a bear market rollover position, if you can get a good roll, it's good. Other, I'd wait for the pullback. You're welcome, Anissa. Hey, Connor. Mike, your videos have helped me bounce back from basically bankruptcy. Your teaching are very appreciated. Well, thank you, Connor. I'm sorry you were close to bankruptcy. I hope you'll manage your stuff appropriately in the future, and please manage risk first moving forward. My channel is very helpful. I hope it is still helpful. I've been looking for a channel like this that teaches more on how to fish. Well, I'm glad. That's what we're here for. Thank you. Thank you, Anissa. Oh, I'm glad you showed up, Tom Tom. 4:20 tomorrow. Thank you for being here, Tom Tom. Thank you, AB. Let's see, Path. I wish we had 55,000 subs. You know what I'm finding? The channels that leave people stranded and just do it all off emotion and get people chasing stuff, and then they're what people generally want to turn into. It's more soap opera, and I'm not a soap opera. I guess when I go in a rant, I sort of am, but I'm not a soap opera channel. And I guess I'm boring with a lot of lines on the screen, but I'd rather be boring and have regulars who want to learn than I guess a big audience who just wants to follow the latest hype. Everyone wants to be like Michael Jordan. I want to be like Mike Arnold. Well, I just want you to be Connor. I want you to be like you and really learn the stuff and be the best trader or investor you can be, and then help as many people you can with what you've learned and pay it forward. That's actually what I'm here to help people want to learn how to help other people. Well, I'm glad you have 56,000 subs. Why don't you tell them all to subscribe to me, NASCAR? Because I'm not going to compete with you. You do you. You do the IPOs. Have them, hey, NASCAR, give me a shout out on your channel. See how many of those subs you can send over here. And you know what? For IPO, I don't know your track record. If you want to post it, you can. But if you're interested in IPOs and what NASCAR does, go check out NASCAR's channel. I cannot vouch for your returns. I do not know anything. But if you're interested in what NASCAR does, hey, he posts his stuff. He's consistent with what he posts. Again, I cannot vouch for his returns. I cannot vouch for his strategy. He does tune into this station. And like everybody else, I appreciate everybody, even Tom Tom, whose every stock always goes up. Sorry, I didn't. So, you know what? If you can send some subs here, NASCAR, because I'm not ever going to compete with you. I would just like people to learn some of the stuff I teach too. My Elon rants are a thing of beauty. It would be don't fight the Fed, not don't fight the Feds. It would be don't fight the Federal Reserve. They have not pivoted or paused yet. Neil, Tom, again, before you probably joined, I said, if they were to pivot or pause, it would probably actually trigger long-term buy patterns from strategies I follow, and we'd be full-blown bullish again. They have not said that. Even Neil Kashikari came out and stressed that they think things are getting ahead of themselves. I know that's what people interpreted Powell as saying. The problem is, and here's my little rant, if Powell shifts to pivot or especially pivot, yes, stocks will go to new highs. Okay? And then the next push, inflation won't be going away. You'll actually be juicing inflation. The bottom 50% of this country that does not own stocks will suffer tremendously. Will still have major pressure on retail and other things else, and they'll still be a long-term anchor, and then the next rollover will be absolutely brutal. And if they were to pivot now, I think we should abolish the Fed anyways because of the way it's been so mismanaged for years. But I'd be shouting from the rooftop that they're actually just trying to pump the stock market again, which fine, you got to play with that. You got to go with that once. If they do pivot, you got to go with it. But I'll have long-term buy signals triggered with that kind of move. So what does it matter? They haven't done it yet. Mike, you're speaking my language and you speak about paying it forward, and I completely agree with pay it forward. Learn, get good, and then help people. I wish more people would do that, and I hope some of you do. With that, I'm going to call it a day. Thank you for tuning in. I will be back here tomorrow morning. We will come up and fine-tune our levels. And as we'll just peek for TomTom 420 tomorrow. 420, could it get hit? Could we hit it there? Yeah, you could. My next level is for the SPY on a continued rally. Where's I need my oops, go away. Give me my crosshairs back. My next levels, my minor level for tomorrow is 414.65 in bull mode if we sustain the support, and then 417.50, then 419.50. That's where we stand. I'll look at the HKD chart. I'll put it up there, NASCAR. Sorry, I'm running out of energy today. I was... See... I'll give you my levels. Well, it looks like this is the stuff, you know, and for people who want to chase this kind of stuff, go to NASCAR's channel. And if you want to dedicate a small portion of your portfolio to doing stuff like this, of pure risk money, go for it. But vertical up, vertical down. Yes, that is an amazing chart, especially for a company. I'd have to look more into this. Asian ADR. What is this? I know nothing about this. I'd have to do research into this, but I imagine we'll do vertical up, vertical down. There's your HKD. Interested in HKD? Find NASCAR and out. NASCAR all out. Sorry, NASCAR all out. You're welcome, Ted. Oh, I'm not assuming you're interested. Again, these aren't plays that I do, NASCAR. And I wouldn't be buying at this levels. Again, I said, if people are interested in this, go find. I don't even know how to find you. Do we just search for NASCAR all out? I'm giving you a shout out. If people want these kind of plays, you know, I don't research these kind of things. This is not what I do. So if people want these kind of stuff, I'm not going to discourage. I just say, you know what, this should not be your whole portfolio. This should be a very small percentage of a portfolio that's set aside for what I consider more gambling plays. And no, would I chase it at these kind of levels? No. Because it's vertical up, vertical down. So that's where we stand. All right, with that, I'm going to wrap it up for today again. And you're welcome to keep tuning in. I'm not going to ever ban anybody unless it's a complete spam bot from this channel. I like to hear all sides of view. I just don't like irresponsible statement like stocks always go up. Stocks generally go up long term from proper valuations, and not all stocks always go up. And not every stock always goes up, and not all stocks go up from insane valuations. You can be holding the bag for a very long time, and that's where I'll leave it. And if the Fed does pivot then and starts juicing the market with money, then yes, I agree. We will go to new highs sooner rather than later. Until that happens, we are in a bear market, and even if that does happen, we will get longer-term buy signals well before we hit new highs. And then we have the probabilities in our favor. And that's all I can trade. And if you're interested in that, then please consider subscribing to this channel. With that, I will talk to everyone later. Bye for now.